Bitcoin continues to push higher over the weekend. You can see these levels already breaking that 21.4. You go to the next on the daily and just take a look and see where you're at. You're already fighting that 22.9. You can see the trading going on. People don't have anything else to trade over the weekend, so they get involved. I found this most interesting. If you go right into this level and you go to the top of the highest bar and look at these wicks, you're just unable to close over that 24.5 for whatever reason. If you got to close over that 24.5 level, then we could actually see this work its way up to here, which is 26.50. Some of the stocks on our list today are going to be focused around Bitcoin and how to profit from the move. Now, obviously, you're still in a massive downtrend, but we are seeing signs of it getting more constructive. Look how the 55 moving average is starting to curl up, and we're actually even starting to see the 200 start to curl up as well. If we zoom out, go all the way back to 2017, you can see this peak, breakout of that peak back in December 2020. So you had that 3-year base, roughly a 4-year base, breaks out, retest, pushes. We all remember the rest, the neck break of this really wonky head and shoulders. But look what's happening in here. We got right down to that level, right back to this major support level. Then it looked like we were going to break, but instead what we did was we came down, broke like you would think that we were going to continue to, and then just went sideways. And now we're flipping major support. And again, if this closes here on the weekly, this becomes major support. Now, those that have been following for some time will notice a couple different things. Number one, the screen's different. So I'm using TradingView and I changed the colors of the bars. The black is red or a down bar, and I'm trying to more lighter nuanced color in the back. So comment on this, let me know what you think of it. And I'm kind of playing around with the colors of the lines, but what I'm finding is that if I use a grayer background, when I put these lines in, I can just see them directly over here much clearer if I use a white line on this background or possibly a blue line. So I'm playing around with it right now. So your comments are appreciated. Now, in regards to this move on MicroStrategies, you should be able to see the watermark right here as well pretty clearly. If we zoom in, we can see that higher high. Denote how the number's right over here, so you don't even have to go and see where it's at. I like that feature. So see where you're at? See how you came back down and you retested right in this range and you were unable to break it. And then since then, you've just had an absolute monster move. So, I mean, if you take a look at from the beginning of the year, this is up substantially. Now, if you start taking a look at what does that mean? Well, it means that it's very quite possible that we're starting to break out of higher highs, which we've attempted before back here, and we just haven't really been able to follow through on it. But it looks like we're heading that way. So right now we're looking for 250. Caveat, I have a position in this and I have calls on it as well. I'm not crazy about buying stocks that are below their 200-day moving average, and I'm not crazy about buying stocks that are below their 55-day moving average, or stocks that are having a declining 55 when there's so many great ideas out there right now. But I think you're going to be remiss in not paying attention to this, because if this gets back to a position where Bitcoin trades up to that level where it's break even or better, you're looking at Bitcoin pushing MicroStrategies, because it's basically one trade, back up to 360. Now I'm going to show you something really interesting on this. This dip on Wednesday, this entire dip was based upon the DOJ coming out and there possibly being an investigation. And then it had nothing to do with MicroStrategies. And look how the stock acted once that news hit at 12 o'clock. It's a complete reversal. For those that don't follow these patterns, I'll link them at the end. You really want to pay attention to these kinds of patterns, right? They are reversal patterns. It doesn't get much clearer that you had a support level here. We saw that on the daily. Got to the support, flipped back over it. It never looked back. And you can just see the monster push that it's had. Now, Coinbase is a name that I am currently short. And what I do after I'm up substantially in these shorts is I marry calls to them and just leave them alone. And I want to own this one and be short it going into earnings. I do want to point out a couple short-term things I'm seeing here, which show me very clearly that it's probably going to push a little higher in the short term. So we have this undercut right here of the low, and then we flip above the low. Now you're starting to see more people get involved with Bitcoin. As they get involved with Bitcoin, we know what's next is Ethereum, and then we know that we're going to start seeing some spike in transaction. Basically going to be more about what that perception is than anything else. Now, if we zoom in on this one piece, and we see this doji. Dojis are signs of uncertainty, and when you see them, you should pay attention to them, and then pay attention to how we move off of them, because they usually lead the move. You can see how we came back down, tested, flips, breaks, doesn't get any clearer of a rejection than a bearish engulfing on a support line, right? Rolls all the way back down, flips back over, but this is really kind of pivotal. We're going to go through this, so make sure you stay to the end because I do want to address the indexes and what the heck's going on out there. A lot of really clear signals, in my opinion, at this point after Friday. See this level right here? See that doji and how you flip that doji, how you're pushing up and how you close at the highs? And then you go across and you look at that close. It doesn't really get much clearer that if you get through this level up here, which is roughly that 58.24, that this can continue to push. And there's very little that's stopping it from getting up to this 78. And that could happen fairly quickly with the amount of short interest in it, which is why once I'm up in these, I just marry call to them and I leave it alone because I don't want to keep putting the exposure back on. But for a longer term trade, yeah, this has problems. This has massive issues. But on the shorter side, to squeeze shorts, I don't think it gets much clearer. Now, Tesla, this is from an educational class that I did. And just I'm going to leave these in here so you can see where your resistance is, like a major resistance point, and where your major support or demand is. You see how you're coming down, testing, tries to get up, can't, tries to get up over it, can't. Now you're having this little wonky bar down here. And what do we have coming out this week? We have earnings. Earnings are coming out this week. So we're starting to see this tighten up into the fact that you're having earnings coming out. Now, our first level was this 128.68 right in here, and you can see how we battled it, and then it was support, you flip it, comes back down, breaks, keeps trying, but then breaks support again. And here's your doji right on your support line. You have a decision, that decision's been made. And then we come back down and we gap fill. And you're gapping fill all the way down to here. In which case, if you are short it like I am, you're somewhat happy until it gets to that support line and then realize that you have a possible reversal pattern where you're watching a bullish engulfing right on that level, right? So that might give you pause if you're short there. Now, rallies right back up to that 128.68. Can't go. We get a doji. Dojis are signs of uncertainty. Flips that doji and then starts pressing higher. Exact levels that we were just using in the room on Friday. And you can just see it's very clear. Like 130 is an issue. And that was resistance. No matter how you look at it, that was a resistance point. You can see it all the way in here. I'm going to draw this across so you can see this. You can see that level all the way across, how you were rejecting it, fighting with it. And then when you broke, it flips to what? Support. And then that just moves us higher and higher. And I would remember these levels because they're pretty significant in my opinion. So you really want to watch that 133 level right up here, right off that top of that wick. That actually should be a little higher. And you can see this 131.33 level. Once you flip that, this 133.34 was on the table. That should be up there a little bit higher. There we go. Now that you see that level and you see that you're flipping that level, well, that just puts here because now you only have this that you're really dealing with on the menu. So that breaking that up to that 136 level is very realistic. So now we know we're coming out with earnings. We know exactly the level that we need to watch. Technically, you have a little bit of a pattern here, don't you? Now, again, as we always state, dojis are uncertainty. And what you have here, you have a clear indication where the black candles are obviously red. Please comment on this. I personally like this format a little bit better. I think it's very clear for people to see the levels, and I think you can see the watermark very clearly. I also like the fact that I can just click on this earnings button. You can see the little date. You can see the estimates, revenue, and earnings. And if I really wanted to, we could just click on financials and actually drill into this a little bit. Anyway, please comment on this. It does help me create content. So you can see the doji, but one thing that we always say is you want to see which way the doji goes. Well, we break this down here, and then what do? We flip back over, and then we form a bunch of them, right? So sometimes it's not just one doji that you have to pay attention to. You have to pay attention to a myriad of signals, right? And this is telling you that you have a battle going on here. As much as people like myself are looking at weekly charts and we're putting out these monstrous head and shoulder positions, we're seeing these breaks, we also have to respect where it is and see these levels in here and how you're holding into those levels. Now, it's worth spending some time on this because this was very clear where you got back to this weekly doji in September, and that's where you reversed, started to try to form a hammer, and now you're starting to curl up. Looking at this on the weekly with earnings, if you just take a look at the fact that you're in this weekly candle and you're fighting, right? So now there's really on a weekly basis, this is what you're dealing with. You can work your way up to that 154 fairly quickly. So the high of that weekly bar is right here, right? And we're going to use the high of that daily. We're going to use 155.5. That's realistic to get up to that level. Now, if you get up to there, you could push to that 189. Now, these are 3 moving averages that I like to use on a 15-minute chart. And I just want to point this out. This yellow, for all intents and purposes, you could think of as a 5 SMA. And you can see exactly what happened when we got to the 5. We held that core level and we pushed higher. I would not rule this out next week. Now, Melly is one that we have been looking at for some time, and it really is setting up here. We actually have the little golden cross right here after your death cross, but I just think it's really pivotal to look at where some of these are closing. So if we take a look at Melly, we see this huge flag. Then on this extended bar, we're unable to get down even 50% of it, which is very bullish. Testing this level, but not really breaking down. The gap down was more to just flush people out, which it probably did a good job of. Now it just looks like we're ready to push. Now you have earnings coming out shortly, February 23rd, but clearing this level, pretty obvious W if you take a look at it. And then we're just looking right here and we're looking at for that 1285, and I think that's fairly realistic. One of the things I would have you start to focus on is don't worry about where you were 2 years ago. I'll save everybody a lot of time. You're never going to see those levels again, no different than 2000. But what I would do is I would take the beginning of the year and look for a level. So here we have February. We're going to take that and just understand that in 12 months, can you get back up? Are some of these stocks going to get up there? The answer is some of them are, some of them are not. Now, I don't know if Shop's going to do it or not. But what we're starting to see is we are starting to see constructive moves. In other words, if we have this 55 and we're sloping down and then we're going sideways and then we're starting to slope back up, well, look at the trajectory of this move since we've been sloping up on Shop. There's our low, then we make a higher low. That leads us to here and a golden cross. Seems fairly realistic for this to try to push back up to this 45 range, then go from there. Now you should be able to see the extension of this 45 range all the way coming back and seeing how this is going straight across, right? So you can see that. So that would mean that during this entire period of time, we have a base going all the way back to April. It's not a bad spot to be on a stock that's starting to turn up. The other thing that I would state is in 2021, these companies had extremely strong comps, meaning quarter over quarter earnings. Now you went into 22 and people went back to the stores, especially towards the end of the quarter. So what we're going to see is we're going to see the comps get easier for them to beat. In other words, easier for them to exceed or meet expectations. Now, what happens with the economy? How that all plays out later down the line, I'm not going to get into all that right now. I'm just going to state the obvious, that the comps are going to get easier to beat. They are not going to get harder to beat. We all know that more people last year for Christmas were shopping in stores more than they were shopping online. I believe the number was 17% year over year in stores and a decline of 2 or 3% online, which was the first time in decades that we've seen that. Obviously, that's based upon the pandemic spike. The concept's important, not the underlying macro issues. We don't know those yet. What we do know is that as the year goes on, the comps on names like Melly, the comps on names like Shop are going to get easier. You can even see it in names like Etsy coming back down, retesting resistance levels after flipping them, which is exactly what you want to see, holding that 55 and then moving forward. I think it's really important for us to understand and to look for patterns. When we see these patterns, it makes life very easy for us to identify them and then move forward. I did an entire piece that I'll link at the end of this video on why one of the greatest misconceptions of 2023 is that home builders are going to come in. And this is one that we actually have in the newsletter, link in description to get the Chasing Alpha newsletter. And what you're going to see, look at this trajectory. And I want to just take a moment here so that people get this concept. You need to see this trajectory change. In other words, and that's a fancy way of me trying to sound smart and just say slope. So in other words, you see how the slope is? See how the slope's coming down? Right? Down is not good. Think of it that way, okay? Is good. Okay, so slope down, bearish, slope up, bullish. Don't read more into it than that. We're coming straight across here, and then we're starting to try to rally back up. And I would not rule these names out. And I would watch that video. I'm going to link at the end. It's 4 minutes long. And what you're going to notice here is that you're going to see a trade and you're going to see a trend that people are just, again, not understanding accurately. Even if you looked at housing starts this week, I'll show it this way. And it's one of the reasons why I'm starting to like just using TradingView a little bit more for these educational information videos. So this is existing home sales. Okay? We're just going to use from back here from 20 to now so you can see. So just so we're clear, in 2 years, the amount of homes that are for sale and inventory is dropping. Despite what you're hearing, the old adage, watch what they do, not what they say, never rings truer than with stocks. And here's a great example. Here's KBH. And all we saw all over the news was, oh, the market's going to crash. They're losing 69% of existing sales were canceled. Of course they were canceled over a period of time because you had rapidly rising rates. So the people that could afford that house realized that they can no longer afford it if they didn't lock in their mortgage, right? They're realizing that they have a problem. Of course they're going to cancel. It doesn't create more inventory. That doesn't make home builders build more. It makes them build less. Watch that video at the end. But the point being is, look at the golden cross. So in other words, we have earnings. Earnings are bad, surprise to the downside. What's the stock do from that date forward? Constant buying, constant. Don't rule these out. Look at shares of the home construction ETF, ITB. Doesn't get any clearer. Golden cross, pulls back, looks excellent. Now I'm going to spend a little time talking about the indexes, but I want to just give a really quick history lesson, and it won't be that boring. Now, the video we did in the beginning of the year on the top trends of 2023, I covered this concept. And here you are in March 2000. And when we compare this market, we really don't have anything very similar or anything closer to than what happened in 2000. So it actually is a really good guide. A lot of the investment banks are using this thesis as well, and it's playing out fairly accurately. What we're seeing is we're seeing this come straight across. And it took 3 years for the Russell to come back. It took 16 for the NASDAQ to come back. Now, short term, we are seeing some signs of outperformance by the NASDAQ, and we're going to get into that in a moment. But if we take a look at what's going on here with the Russell, it pretty much looks like a W to me. You've never really undercut this June low. So you have a 6-month bottom. In other words, you have not made a new bottom in 6 months, and we're just very simply grinding across. You have pulled back to the 200 and you have pulled back to the 55. You have stopped dead. Now you're flipping those levels. Start watching this TNA. If this market continues to push, which it looks like it may, once we get over the top of this, which is roughly that 39.25 level, you can see this entire trend right here. You can see how we battled this level over and over again. So if we get through that 39.25, we could push to that 41. If we push through that 41, you're looking at 44, and then they just walk us up. Then you're going up the black nasty bar, 48, 50. You just start getting into these gaps. And again, as this picks up steam, it can really start to move. When we focus on the trend line, it becomes extremely clear what's going on here. You don't need to be a rocket scientist or a guru to know that you were going to have a problem in here, possibly. Not that it was going to do that, but that you were possibly going to have a problem. But there is a pattern going on here that we need to be really aware of. There's your lower low, higher low, higher low. Now, everyone can say anything that they want. Until one of these breaks now, that's all that matters. Everything else is conversation. Everyone can talk about this indicator, that indicator. Matter of fact, I was doing it. I was talking about this thrust indicator that I have marked off here, how rare that signal is, right? A matter of fact, that signal's so rare that you will not see it more than probably 3 or 4 times during the year. You could see it back here during the pandemic. Even I'm looking at that signal and I'm allowing that signal to influence me. I like that the signal's there. But what I really need to watch is I really need to watch my support levels. You really need to watch 39.15, because if you break 39.15, then that's going to be a very clear rejection, and that's going to get us down to this 37.63. Now, it's possible that the pullback we just saw was very simply a rotation, and this is worth paying attention to. Here is the NASDAQ in relation to the S&P. This is where we started back in August, and you can see this trend line very clearly, and you can see how we are finally breaking that trend line. This could mean that we're setting up for the NASDAQ to outperform the S&P. That is possible. Now, there could be a couple reasons for that. There could be that earnings are better than expected. Could be a short squeeze. I don't need to get into all the reasons. What I need to understand is that this is setting up for a possible short term, since it's an hourly chart, possible short term outperformance. I'm going to want to see how I act at that 0.72 level. The percentage and change, the rate of change is more important than the actual number. So what we're trying to do here is we're trying to look and identify what's going on. Now, by looking at this, we would know that the NASDAQ is setting up to outperform the S&P. But why? In front of us in black is the utilities index, XLU. In orange is the S&P. You can see very clearly what happened here. This entire move was defensive names, people buying utility names, the bond market moving a little bit higher, people feeling comfortable owning yield. Now we're taking out that lower low, but at the same time, the S&P is holding at the black line that is now the technology sector in the S&P. And look at how the sector is moving in step with the index now. In other words, before we had a couple, some more significant selling down. We're not really seeing that now. We had more selling. We're not really seeing that now, are we? We're coming down a little bit more. We're still underperforming, and we still may underperform, but that doesn't mean that we don't get spikes of outperformance. And you can see that right here, right? You see this spike down where the index in orange hits a lower low, and you can see here where the index does not hit a lower low, but the XLK does. These are industrials. Now we can see that the market in orange went up, but industrials still came down. So if industrials are coming down, the market's going higher. In blue is the XLK. We have rotation, and that's what we're seeing. We're seeing just straight up rotation, and that is what's throwing a lot of people off. In the private video I did yesterday for the Alpha Chasers community, to join the waitlist, there'll be a link up here in the top right. I mentioned that it is very clear that we rejected on the S&P. Very clear to see this rejection. Anyone can spot that. Anyone can look for the trend line and clearly see the trend line that is just absolutely glaring. I think I'm more partial to the white trend lines and white support and resistance versus the blue. But again, please comment, because that's why I create content, and we'll see what works here. Now, what I like about this is that rejection, and I like the confusion that I saw Friday, even though I also had confusion. What I like about it is these pullbacks are getting shallower, and it's actually technology names that are holding in there. And if it's tech that's going to lead, even if it's a short period of time, you're going to see much stronger movements in the indexes than we've seen in the past. You can see this move right down. Usually you break that 55 and we're at least consolidating. The exact opposite. And the reason for that is because it was rotation. It was just not broad-based selling. I hope you found this helpful. Again, comment on style of the video. I do like using TradingView. I think there's more functionality to it. No, I can write certain scripts for it, proprietary indicators that it's much easier for me to use those here. What I would leave with is put yourself in a box. In other words, just don't assume that you're just going to crack again. Actually start to do the work. I mean, it's one of the things that I really try to preach in our community is, yeah, we'll do alerts, but it's really education and having a process. Don't assume that we're just going to drop back down and that earnings are going to be a mess. They very well could be. But the price is going to tell you and dictate what you're supposed to be doing. Everybody have a great day. As always, any questions, reach out. Trade to win.